Welcome, everyone. Thank you for joining us today. I'm 𝗖𝗣𝗜 Biniaz. I'm joined by 𝗖𝗽 Benesocky. Welcome, Eva.
Thank you, August. Hi, everyone. Thank you so much for joining us today. We are joined by Darin Batchelder. Now, Darin helps people grow wealth by passively investing through multifamily real estate investing. And I also want to make note that he is the podcast host of Darin Batchelder's Real Estate Investing Show. So welcome, Darin. Thank you for joining.
Well, thank you for having me on. I'm looking forward to it.
Fantastic. So Darin, I just want to jump right into things. Why don't you go ahead and tell our viewers about yourself?
Wow, that was a really open-ended question. So you know, I've been through a number of different career paths. Went through the corporate world, started out as CPA, software sales, institutional loan trading. Started my own company back in 2007. Still have that company focused on trading large loan portfolios between banks. But about 3 years ago, I got involved in actually investing in real estate, and that's, I think, the purpose for this call is on that focus. And so I had some time. My business was running efficiently, and I went out and my wife and I first bought a duplex, new construction duplex. And after we signed the contract on that, it was going to take a year to build. I was like, we're going to make some money on this, but it's not going to be a huge wealth generator. It's going to take a long time to really grow. So I wanted to go bigger. Went looking for a way to do that, joined a multifamily mentorship group in December of 2017. And since then, I've invested passively in a lot of deals, probably 7, 8, 9 deals. I've syndicated as a lead sponsor, a 76 unit townhome community.
Nice.
And then I've been a general partner, not the lead general partner, but a general partner in 2 other transactions, both 200 plus unit deals.
Fantastic. Look at you go. You get started and then you just kind of keep going up the ladder. That's
Scaling,
fantastic.
for sure.
Scaling.
Yeah.
So now that we're kind of on this topic about passive investing, why don't you just, if you don't mind, could you explain to our viewers what a passive investor is?
Sure. So, the term syndication is used a lot. And I think that word can scare a lot of people off. Syndication, oh, it must be for somebody else more sophisticated. And really all it is a bunch of people coming together to buy an asset that they couldn't buy on their own. So there's lead sponsors or general partners, or those people are the ones that actually go out and find the deal and get the deal under contract, and then will present the opportunity to other high net worth individuals as an opportunity to invest in that transaction. And those investors would then be limited partners, and they would be investing passively. Now, all that means is you're going to be wiring a certain amount of funds into the deal. You will own a percentage of the deal, and the lead sponsors, the general partners, will manage the deal, and then they will send distributions to the limited partners on a periodic basis.
Great explanation. I think that there's a confusion there where people, most people think about investing in real estate. They think about buying an asset. This concept of passively investing, where you're a limited partner within a general partnership, within a limited partnership, and there are general partners who manage the project and get a percentage of the profits when most of the profits come to the limited partner, is something new, at least for many of our Canadian investors to understand. But yes, you could invest in real estate and do it passively as a limited partner. And thanks for that explanation, Darin.
And what was it about the syndication process that interested you?
So first of all, look, there's people in the real estate world that, range the different age groups, right? 20 something up to, I'm 50. So I didn't find out about this until, 3 years ago. I was 47 years old. And I'm like shocked that, in all my time, I did not have one person present me with an opportunity to invest in a transaction like this. So what intrigues me is getting the word out and letting more people know that they can do it. And, with anything new, there's a fear, about what's involved, what do I need to understand, what do I need to learn, how does it work, how do I receive funds, is it better investing in these types of deals than investing in the stock market? All those questions come up to somebody. So what you guys are doing, for your audience, what I'm trying to do, for my audience, is teach people, that yes, you can do it. Although you maybe don't know how to do it now, it's not as intimidating as you may have thought.
Well said. Well said. And yeah, I mean, and I call it marriage. Maybe some people don't believe in the concept of marriage, but this marriage between
I do.
Okay. This concept of marriage between the investor and the general partners is truly incredible when it comes to the world of syndication, because the general partner, the brains of the operation, is out there finding deals, underwriting them, managing them, has a track record, has the experience to be able to play the management role in an asset, and then they want to continuously do projects, but they might not have the capital to continuously do. So that's when they reach out to investors, in the case of syndication, passive investors, and they join together. But also the great part of this is that the general partner, the sponsor, unlike other investment vehicles that exist, so financial advisors or real estate agents, the general partner only makes the majority of the profits in most structures from the performance of the deal, and that's the beauty of it. So imagine investing in a deal, and in a way, the limited partner is compensating the general partner relative to what performance they have on the deal. So that's one of the reasons I fell in love with the concept of apartment syndication and real estate syndication in general.
And I love what you're doing, Darin. We are, like you said, we're kind of doing the same thing on our side of the border here. We really align with that because I've had a decade of years of selling real estate in the real estate world, and I've never come across an opportunity like this. So about a year and a half ago, when I was presented this opportunity, I'm doing the exact same thing, spreading the word for everybody to just benefit and grow their wealth a different way than what we knew how to build our wealth.
I don't really understand why it's like kept such a secret, and it's getting more, with the internet and with Facebook groups and social media, it is getting, out there more. But, look, I was always an avid reader of the Wall Street Journal and financial magazines, and always looking for ways to grow wealth. And I just never even knew you could do this. If I drove by large apartment communities, I thought they were owned by large institutions. I didn't realize that, just everyday people were coming together and pooling their money to buy these assets.
Yeah, but that is somewhat of a newer concept. I mean, historically, hedge fund and larger funds raise capital from institutional investors, university endowments, family offices, pension funds. So those large investors would invest with hedge funds or other funds, and then the teams like Blackstone, KKRs of the world, and they would go and make investments through mergers and acquisitions. But this concept of being able to now other teams also existed as far as the real estate side, but it was always meant for the institutional investor. And this concept of apartment syndication is allowing for the everyday investor, the retail investor, if you like to call it, to be involved in a large asset. So I mean, imagine the project we're currently looking at. It's a $65 million, and that's in USD, so that's much higher in Canadian. But imagine being involved and owning a part of a $65 million asset. So that kind of shows you that it's practically democratizing real estate investing. So anyway, I don't want to get too excited now. I always kind of go
it's
for,
exciting though.
It is exciting.
It is exciting.
Absolutely. And it's great. It's
Democratizing real estate
sure.
investing and allowing retail everyday people to be part of this 1%. And that's really cool.
The way the 1% invest. So
absolutely,
for sure.
Now I have a question for you. What
Sure.
markets are you involved in, Darin? And what are the markets you feel bullish about in 2021?
So I live in the Dallas. I'm originally from Connecticut, originally from the Northeast. But I spent like 14, 15 years in South Florida, and I've been in the Dallas market for the last 11 years. Dallas just happens to be a fantastic apartment market. for a number of different reasons. I like the Texas state, all the major markets, Texas, Houston, Austin, San Antonio. My focus is really on Texas. I would prefer to be in Dallas. I just was involved in a deal in Houston, which I think has an awesome opportunity as well. But because I live here and it's a great market, but I think that there's other great markets across the country too. Some of the defining characteristics of what I would consider great markets are, markets that have population growth. So people are actually moving into that state versus moving out of the state, where there's job growth and income growth. So, Texas, people are moving from California, Chicago, New York into Texas, and companies are moving out of, California and other areas into Texas, creating jobs. And so with more people, there's more competition for those apartments and more of a need for those apartments.
Yeah.
Other markets, Arizona, the Carolinas, Florida, all, great markets, Georgia.
The Sun Belt states, no, for sure.
Yeah.
And just a couple of things about Texas that I would like to mention. First of all, is a huge landmass, state. Was going to say country of its own. In a way, it is, because they
people believe that, the long timers that have lived here forever.
Yes. So also in regards to Texas alone, the state alone has a larger economy than the country of Canada. It has a larger economy than the country of Russia.
Wow, that's
so
crazy.
It's truly incredible that just one state alone. I mean, California does as well, but California is the richest state and the richest country in the world. But yeah, getting back to Texas, a lot of influencers. So people like Joe Rogan, Elon Musk. I mean, these influencers are also moving their headquarters. I mean, Elon Musk has moved his factory. I think is already under construction or is fully constructed already in Texas.
Right. Austin, all right.
Exactly. Yeah. So these influencers, I mean, people, and as if you're an avid user of Twitter, you can see that Elon Musk makes a tweet about a certain cryptocurrency or about a certain stock, and that stock price just goes through the roof. So when they make the decision to be in Texas for business friendliness and other positives, you're going to have that inflow of people, and maybe some people who are not in the U.S. don't understand that over 300 million people are actually, there's a migration happening within the U.S. that people are moving out of California, moving out of New York, and moving to Texas. There's interstate migration happening, and we just follow basically the numbers and the data.
Follow the numbers, absolutely.
Yeah, absolutely. So those are big reasons why I still like the state of Texas as well. And great workforce, it's clean. The cost of living is substantially better than the coastal markets. So what else you got for me?
Very, very business friendly, I might add as well.
Yes.
Yeah. I mean, just friendly in general. The people are friendly. When my wife and I moved here from South Florida, we felt like we were in the twilight zone for the first couple of weeks, because, people like, men will open the door for my wife, walking in, or you walk into a store and somebody says hello to you, and what, you don't know me, right? It just has a friendliness to it. But then it's clean, it's affordable, it's very educated workforce, and cost of living is just substantially lower than other major metropolitan markets.
Great. Can't wait to visit there shortly.
Yeah, definitely.
Yeah, absolutely.
This is a good question for you. What are the asset classes that are most compelling to you? I know our good friend, Dan Hanford, he's now getting in, he started with multifamily, he's now getting into the storage facilities. Is multifamily still the top asset that you're interested in?
For me, yes, for a few different reasons. One is that, so my prior business, and I still own that business, but I've been in that space since 2002, trading large loan portfolios, residential loans, multifamily loans, and commercial real estate loans. And from that, the bank buyers of those portfolios, I learned a lot from them over the years, and they just loved that asset class because the performance, because the cash flow, people need to live somewhere. And so even if other things kind of, are become problematic, and somebody goes through a cash crunch, they're most likely going to pay for food and rent first. And so, because of that, the performance on the loans is very attractive. So, because of that knowledge and that experience with other banks that really love the asset, I kind of gravitated towards it, and I still believe that it's a great asset from that perspective.
We agree. We totally
We
agree with
totally
you.
agree. I think I was watching an interview and I watched you, and you had mentioned that you were a KP on deals in the past. Currently, we're looking at a deal, and we had to bring on a KP.
Key principles. We just
Oh,
want to
yeah,
mention that
sorry.
because
Key
some of the
principle.
viewers might be
That's-
wondering, what is a
Right.
KP?
Yeah, key
Right.
principle. So
Exactly.
maybe you could tell our viewers what is a key principle.
So a key principal is not somebody that not part of the general partnership group, but is somebody that is willing to sign on the loan. So basically, say you buy a large property, and there's a group of general partners, 2 or 3 or 4 general partners that found the deal and are putting the deal together. If the loan is going to be a $10 million loan, then the group, the general partners plus any key principals, have to have a net worth of $10 million or greater. So, if the general partners don't, fulfill that requirement, then they will bring on 1 or 2 other, key principals to actually sign on the loan. So that's a requirement from the agencies. Now, why would somebody want to sign on the loan? That's another question. It was funny when I got involved. The progression seems to be, if you want to become a lead sponsor and a general partner, a lot of people do, hey, become a passive investor first, learn what it's like to be a passive investor, then go be a key principal, and then become a general partner. And so that's a progression that a lot of people will go through. And so I was following along, and I'm like, all right, now, I've been a passive, now I want to be a key principal. And it was funny because a new deal would come out, and I'd go to the general partner, hey, I want to be a key principal. And sorry, Darin, man, we're already filled up. We just needed 2. I already got my 2. And my wife's like, what do you get out of that? You're signing on the loan. And I'm like, I'm not gonna get anything. And some people will get paid for being a key principal, but a lot of times people want to be a key principal, so they're willing to do it without compensation. Why would they do that? Because when you become a key principal on a deal, like when I was my first key principal deal, it was 150 some odd unit property. And well, now I'm on a Fannie Mae loan as a key principal, so I'm in their database. So now that gives me experience with Fannie Mae. When I go to do a deal as a general partner, they'll look in their database. Hey, is Darin on any other loans that we have? Yeah, he's on this loan. Oh, it's performing well, and you just get some credit for that. What I would tell some people now, what I know now versus then, was, look, in order to win a deal as a general partner, you're most likely, I'm going to say you pretty much have to. If you're going after larger deals, you're going to have to partner with somebody that already has experience, somebody that already has 100 unit plus deal or has 5 deals under their belt. And so you're partnering with that person. Well, that person already has the experience with Fannie Mae and Freddie Mac. So, I didn't really need the KP experience when I look back on it, but that's the progression that a lot of people go through.
Great. So Darin was talking about that he was a KP and he didn't even have any compensation. Why did I just give the keys to the house to our KP? What's going on?
I've never heard that one before, Darin. That is
Yes.
very interesting, because we
Yes.
definitely have, it's a big check to write.
So so if you're, doing deals and you don't have a ton of people that are chasing you to be a KP, then you have to offer some compensation to them for signing on the loan. But I'm part of a multifamily mentorship group, and there's a lot of people that are coming in trying to get their first deal. So they want the experience of being a KP. So they're chasing after the general partners. Hey, volunteering. And so, like anything, it's supply and demand.
For sure. For
Supply and
sure.
demand.
Great.
There we go.
Great. Thank you for that.
Now, this is an important one. This is obviously key to our business that we're in. Let's talk about investors, the investors, or the LPs as they're known in the world of private equity. How do you cultivate your relationships with the LPs, with the investors in your projects? And how do you nurture your relationships with them? Do you take them out for dinner? Do you send them great content? Tell us a little bit about how you do that.
Sure. In this world, it all comes down to know, like, and trust. So, if you're going, the minimum investments on these types of transactions are typically $50,000 or more. So there, I've seen some deals where they're 25 or 30, but most deals I see 50,000. Some of the larger deals, 75,000 or 100,000 minimums. So, it's a big chunk of change to be forking over to somebody, especially your first time. And so you want to get to know that person. So how do you get to know them? Well, you can, if you're part of a multifamily mentorship group, then you go to events where you get to know each other, face to face, and you can talk about your background and build credibility and trust. Other ways are free meetup groups. You can go, there's free meetup groups in almost every major metropolitan market. And you could just look up, there's an app called Meetup, and you could put in apartment investing or multifamily investing and look for free meetup groups in your area. And there you'll find other syndicators, and you'll also meet other passive investors. So the syndicators, you want to get to know them. What's their experience? Is this their first deal? Have they done 3, 4, 5 deals? What's been the performance on their prior deals? Then talk to other passive investors. Who have you invested with? Who do you like? Who do you not like? Why do you like certain people over other people? And that's the one thing about this business. You do have to get out there and spend a little time to get to know people.
Absolutely.
Great. So now you've
Like
gone out,
this.
you've got to know them. They know about what you do. And then now do you have any kind of process for nurturing those leads you've made or those contacts you've made until you have a deal in the future where you're trying to bring them on?
Well, I'm going to jump in here. I know he has the nurture part because I'm signed up to your emails and I get excited every time I receive one. So,
well, look, it's like anything, you kind of have building blocks. When I first got into the business 3 years ago, I was not on social media at all.
oh, really?
I was not on Facebook. I was not on Instagram. I did have LinkedIn for my other business. But I didn't see the value in it. And then when I joined, they were like, look, you need to get into this private Facebook group. So you need to get on Facebook. So once I did that, all of a sudden I had people reaching out to me from all over the country, and I'm having separate phone calls, and I'm getting to meet people all across the country, people that are just focused on either wanting to be a syndicator, the lead general partner, or passive investors. And so I was like, man, now I see the value in these social networks. And so I started to learn more about it. And, so the next step was I would go to a lot of conferences and people were telling me, hey, you need to be on Instagram. And I'm like, Instagram, that's like my kid's toy app. They just look at pictures. And so I hired somebody to teach me, what do I have to do? And then, so you get emails now. Last year, I ended up starting a podcast, and I hired a consultant to help me launch a podcast and also come out with a website. And, how do I continue to communicate with people, and so, we'll have a couple emails go out a week, one for a podcast episode and one for a blog that we do. And that's one of the ways that we kind of continue to try to stay in front of and nurture people. But, what I would say is for people that are getting into the business, there's different buckets of contacts that you'll have. You have people that you meet that are in the multifamily world, right? And you know that they just want to invest in multifamily. Then you have other relationships that are friends and family, and colleagues from other career paths. And those people, they may not have relationships with 10 or 20 different syndicators. You may be the only relationship they have that does deals like this, but they may take a little bit more education, so how does this work? What's involved? What are the risks? How do you mitigate those risks? All those things, where some of the people that have already invested in 2, 3, 4, 5 deals, they're like, hey, Darin, man, I saw your deal. I got 4 other deals in my inbox. Like, I like you, but like your deal, but why your deal over the other 4? Right. And that's a different discussion than having a discussion with somebody that's maybe friend and family. And they're like, look, all my money has always been in the stock market.
Yeah.
I'm interested in real estate, but I don't understand it. What's the biggest risk? How does this work? And you might have to spend more time with them, but if you can get them over the hump and help them understand why diversification would help them, then, you may be their go-to person for all transactions going forward.
Yeah.
Absolutely.
Yep, go ahead.
I was just going to mention this whole education thing. We kind of did it backwards. We're like, let's start a thought leadership platform so we can kind of introduce this whole concept of syndication and teach people what are the risks, what are the benefits, diversification into real estate. It's been pretty fun for us because a lot of people, including my parents, were kind of wowed at the beginning of it.
Who've been accountants for like 30 years.
They've been accountants for 30 years and really, really cool. I was teaching them this concept of pooling Canadian money together and going in the US. And I have to make a joke real quick. My dad's like, you need to patent this. And I'm like, Dad, this is not something I can patent. This actually exists. So
there's a treaty between Canada and the US, which allows Canadians to invest into the US and be relieved from double taxation.
But this whole education side, 100% agree with you. And that's definitely something that.
But that's huge. Like, you know what? I mean, if you are building a thought leadership platform and you're introducing people that didn't know that they could even do it before. And so first of all is just letting people know they can do it and then presenting them with the how. Well, how do I do it? And what are the benefits to doing it? So you're providing the answers and the framework for them, which is fantastic.
Yeah, no, that's
we definitely get, I'm excited to jump out of bed every day. Just keep it going.
You go to sleep? I thought you
I go to sleep. Yes. I definitely go to sleep.
So we're gonna open it up. If and everybody on Zoom, if you have any questions, please go ahead and type your questions, and we'll still have some more questions for Darin. And on Clubhouse,
we had some people join.
Raise your hand. I see some familiar faces on here. If you like, you can type your questions on Clubhouse. You can verbally say it, but if you like, raise your hands and I'll bring you up, guys. Okay. As we wait. So yeah, just want to kind of also touch on this whole concept of alternative investment vehicles that exist in the real estate realm. So apartment syndications are not the only vehicle that exists. There's also what we call mortgage investment corporations here in Canada, and I believe in the US they're called mortgage funds, where they become basically syndicated mortgages where they use the funds to be bridge lenders. That's another vehicle that exists, and as long as the group is using a low LTV, it's a very safe investment that exists for investors. There's also REITs, there's different real estate funds. So there is ways to invest in real estate by investing in alternative real estate investment vehicles. Apartment syndication isn't one, but and another thing, as when it goes to the education part, why I fell in love with the concept of apartment syndication or US multifamily was because here in Canada, the rent to value ratios are not the same as they are in the US. So on a multifamily asset, when you do a 70-30 LTV where you put down 30% and borrow 70% from the banks, when on the rents you collect, you have a hard time to pay your mortgage payment.
Oh, is that right?
Yeah, let alone in the US, you pay your mortgage payment, pay your taxes and fees, pay your property management, and pay your investors between 6 and 10% pref returns.
Unheard of.
I just about fell off my seat because I was so used to the system that we had. In my deals that I was syndicating, before even knowing what the word syndication meant, I was doing development projects. These are projects that start kind of it was a bit of unknown because there's environmental issues, there is city bureaucracy, there is unknown items like what the FAR is going to be when the project is built. Floor area ratio is kind of an unknown number where you might get into a deal expecting to get a certain percentage from the city hall, but when your project goes through rezoning, you're not getting that percentage, so you lose a bunch of square feet. So, and myself investing in the deals, and my investors would get no returns until the project was built and every single unit was sold. So there is no cash flow. And when I saw multifamily in the US, and I saw the numbers,
not to mention the cap rates here, Darin, are 1 to 2%.
Yeah, so that's crazy. Yeah, it's crazy. And look, I don't know what's going to happen. You know, I mean, if markets like, you know, Dallas and Texas are going to start shrinking cap rates, I don't know. You know, if you look at California, or it sounds like Canada's the same way. I mean, you get very little cash flow in certain markets, and so if all money starts flooding into other markets, it will make it more competitive and would put downward pressure on those returns.
Yeah. And we're seeing that definitely seeing that in Arizona now. The cap rates are compressing, and there's talks about, oh, bubble, this is not going to last. Well, the same talks were said here in Vancouver, I would say probably starting 15 years ago, that this is a bubble, the fundamentals don't exist, this is not going to last. And the cap rates have been compressed to 1% now. And the same properties that were there, now they're 400% higher. So I forecast the same thing when it comes to these areas in the US, certain places in Texas. Dallas definitely is one of those cities. Austin, in Arizona, Phoenix is a huge, there's billions of dollars every year that's going into Phoenix from here in Canada, on the institutional side or the retail investor side. So so those fundamentals exist. Any questions anybody has, please jot them down here in the Q&A.
And why don't I finish up with my 2 main questions that I like to ask?
Well, let's give our guests just a few more minutes to get in here. I know they're a little bit shy. Usually there's full of questions here. They're a bit shy, but we'll just.
Well, I want to make one comment on the difference, you know, between a REIT, you know, versus syndication, because
Please.
You know, if you're buying a REIT, it's like buying a stock, right? And so you're buying it, and you may have dividend, you know, typically they have larger dividends than traditional stocks to come back, and then you're banking on appreciation, but you're buying a paper asset. So the difference is on these syndication deals is that what happens is they form a newly created LLC, and then all the limited partners and general partners are buying an ownership percentage of that LLC. That LLC goes and buys the asset. Well, one of the big advantages of that is that the depreciation on the property flows back to all of the investors, the limited partners and the general partners, and does not go to the bank who provided a loan of 70, 75, 80 LTV, but it goes to all the investors, where when you buy a REIT, you don't get that benefit. That's what one of the huge benefits of these syndication deals is, the tax efficiency.
Yes,
absolutely.
and also, you know, when you look at these larger institutions where they invest in real estate, it's also the upkeep. I mean, the fees they pay their hierarchy is unbelievable. I mean, people are getting paid insane amounts of money, whereas the syndication process, you're partner with the GP. The GP is project specific, is deal specific. So
absolutely.
There's just so many bonuses that exist in the process. We have a quick question here, and thank you for that, Darin. We have a question: can Canadians get mortgage in the US? Yes, they can. There are certain minimum requirements. For our process, we partner with other U.S. groups to get financing, like we were mentioning earlier about key principle. But our U.S. entity that is a limited partnership in the U.S. will own the asset, which is comprised of our Canadian limited partners, our U.S. limited partners, and our U.S. team, which we're the GP, and our U.S. partners are the GP. So that entity is what owns the asset, is that entity that files for a mortgage. And the process for these larger commercial mortgages in certain ways are easier than personal mortgages for Canadians trying to buy let's say, single family home in the US, because the LTV is higher. There's minimum requirements for LTVs, minimum requirements for the amount of down payment needed to be put down for a Canadian individual looking to buy real estate in the US. So I hope that answers your questions.
Now, the next question here is, how do I get started? Where is a good starting place?
Good question. So, I think the best place to start is to, start reaching out and educating yourself. So education can happen in a number of different ways, reading books. It can be going to free meetup groups. I think that that's probably the best way, is to either join a multifamily mentorship group, or start going to meetup groups and meet other people that have already done what you want to do. So if you're not going to go out or you don't live in an area where there is one close by, there's a lot of Facebook groups that are focused on multifamily, and you can get involved with those Facebook groups. You can watch podcasts, listen to podcasts. You can look at YouTube videos. There's so much education out there right now.
Absolutely.
Clubhouse. Don't forget about Clubhouse.
You can listen to Darin's podcast.
Clubhouse.
Absolutely.
Clubhouse.
Absolutely. So maybe we can close off with the 2 questions we ask our guests.
Absolutely. Sounds good. Darin, what is your advice you'd give, your number one advice you'd give to a passive investor?
Get started as soon as you can.
Nice. I love that. That's fantastic. Now let's go on the active side. What is your number one advice you'd give to an active investor?
Or somebody looking to become an active investor is
Correct.
also a great part to add to that, if I may.
Sure. So I have a lot of people that reach out on Instagram or wherever, and people are all different ages, 20s, 30s, 40s, they all want to get involved. And I think the first step that any new person needs to do is they need to cultivate relationships with experienced syndicators to partner with. And look, my advice is not the end all be all, but I advise that they should have, I say 5, but 3 to 5 experienced syndicators that they can go to, because sometimes I have people that are like, look, I got a guy in the Midwest. He owns 2,000 units. He said he'll partner with me. And I'm like, all right, great. Now all of a sudden you spend a month and a half, you get a deal, you're in best and final, and you call that guy and you're like, hey, I got this deal. I think it's going to work. I think I can win the deal. And he's like, look, I just partnered on another deal. I want to partner with you, but I can't do both at once. And now what are you going to do? If you don't have somebody else to call that is ready for that call to say yes, then you're going to lose all credibility with that broker, and you're not going to get in the door again.
Great.
Advice.
Really appreciate that. Appreciate the advice.
And we really appreciate you coming on today, and just
Absolutely.
Our guests enjoyed you.
Yeah, definitely. We hope our guests enjoyed you and us. I hope they enjoyed me, because I'm the least enjoyable always.
Well, I thank you guys for doing what you do. Thank you for the invitation. And, the exciting part about this business is, not only the different avenues to grow wealth, but because you are forced to partner together. So all the people that you're educating, okay, at some point they invest in deals with you, and then you see how you're helping build the wealth of all these other people, so that is what's exciting.
Great point. Great point.
Beautifully
Thank you
said.
so much again. Thanks everyone.
Thank you everybody for
hope
joining
all of you
us
have
today.
a great rest of your day, and we'll see you soon.
And Darin, we'll see you on those social media platforms that we're all on.
Fantastic.
All right.
Fantastic. Look forward to seeing you guys.
Thank you
Bye-bye.
so much.
Bye now.
Bye, you guys.